So first and foremost, as I always like to start these presentations, thank you for being here. Your attendance is always appreciated. Your business is appreciated. Your involvement in our communities is always great. For those of you in the Discords, for those of you in our trading rooms, my team and I always value your participation in the products and the services that we bring to market and use and help people become better at, right? But this is a special event to me and to our team, and I'd like to think to everybody here, mainly because it's about order flow. And order flow is the beating heart of the market. It's also one of the most widely used products in the entire line of everything we've ever developed. As a trading company, as a trading software company and ecosystem, we have more people using order flow, or at least interested in using order flow, than any other product that we've ever built. And so whenever we do something with order flow, it needs to really pioneer and shift paradigms in a way that really moves the needle. Like it's not just good enough to build something, right? It has to be qualified to take you to the moon, or it's not interesting to me, at least, right? And that's why I've kind of titled this event Disrupting the Order Flow Game, because that's exactly what we're about to do. We're about ready to disrupt the space when it comes to order flow. Now, for those of you that are new in here, or for those of you that don't know me or my team over the past several years, we pioneered order flow. There's a lot of vendors out there right now that are ultimately, selling indicators and software with order flow, but we've been around since Ninja 5, Ninja 6, back before NinjaTrader was a broker. Right. So when we built order flow, the print profiler's seen over 75 revisions, right? We've got more traders using order flow before 90% of the order flow vendors in the space even launched order flow, right? So we know a few things about it. And what I'm going to do is I'm going to talk to you about how we're the pioneers, right? We're the pillars. We're the guys that make the move, and we do it because it works. And so what I'm going to do is I'm going to talk to you about how it's time for you to freeze the market. How many of you guys would just love if you had the ability to just stop the market? I know that's pretty bold to say that. I wish we could all literally stop all traders around the world from executing at the same time. But how many of you guys have ever thought, like, wow, I just wish I could stop the market? Right? Like in real time, stop the market and have the ability to see what's going on and be able to make a decision and be able to test that decision, right? And it doesn't, and I don't mean market replay, right? That's a mulligan, right? Right? I mean real live data. And so what I've developed and what my team has been working on for the past over a year, is a real-time order flow execution algo, but it's not just an algo. And we'll get into that in just a moment. It's a hybrid trading system. It's a combination between a fully automated order flow algo and a discretionary signal generator that allows us to be able to trade manually or fully automated, right? And I wanted to build this in a way that it's not just for the automated traders in here, because we have a lot of algo traders in here. But we also have a lot of discretionary traders in here. Do me a favor and type in the chat box if you're only an algo trader, type A. If you're only a discretionary trader, type D. And if you're both, type a B. I want to know how many of you guys are trading both, manually and automated, discretionary, right? Both. Got a lot of traders trading both in here. Okay, great. Got a lot of, right, got. So that's exactly why this software is so revolutionary. It's a game changer, okay? Hence disrupting the game. So I'm going to show you how we freeze the time, we freeze the market, and how we take control of order flow, okay? Now, I do need to cover a quick disclaimer, guys. As always, I'm going to be showing historical trade results. I'm going to be showing performance reports. I'm going to be showing my trading today. I took trades today manually. I traded automated and manually yesterday because I get a lot of people that blow back, right? A lot of people say, oh yeah, Sean, you're selling this software, back test. And oh yeah, optimization's garbage, right? And I get all that, right? So I trade it live. I trade it forward. I run my optimizations, and then I trade it in real time in both automated spaces as well as discretionary, right? Because there's always going to be naysayers in here, right? And we don't have time for that, right? Because we can't please everybody, nor do we want to be guaranteeing results. Can't guarantee anything, can't control the future. So if you guys could do me a favor, if you could just type a Y in the chat box that you accept the risk disclaimers, so we can all approach the business like professionals and we can all carry on. Excellent. So why would someone want to automate? It's a good question. Because automation isn't about running an algo 100% fully automated. You could automate completely, put yourself into more of a automated entries, automated exits, automated signals. But you could also just automate entries and turn the algos on and off because you're at key areas of interest. And why would we want to use this type of a system for that versus all the other types of algos that we've ever built or that maybe you guys have seen? Because Orderflow is different than indicator-based systems. So why would we want to automate what we're about to show you? Well, first of all, manual trading, you're physically not able to do this. Like, no matter how good of a trader you think, I don't care if you're the best trader that has ever walked the earth, you are not fast enough as a human being to automate your own abilities to match the time and sales. It's not possible. Like, time and sales is coming in way faster than humans. Hence why computers were built, why server-side trading and algos and quant firms do what they do, right? And so manual trading can be emotional. You miss a lot of trades. You cannot execute fast enough order flow execution. And therefore, you're missing or you're getting bad fills. And what ends up happening is that you then curve fit or you over optimize or you try to miss signals because you're being discretionary too much, right? So this is why automated trading happens, right? Some things you want to do because you need to do that, not because you want to, but because you have to do it, right? And this is why I believe automation has its place in its queue with regards to how we choose to approach this type of discussion, because it's not just about running a fully automated system. There's a lot of traders in here that I am about to change the way in which you trade everything that you've ever done, because you can still trade levels. You can still trade everything that you're doing and not have to be a fully automated system trader to leverage what I'm about to show you. However, you could be an algo trader that loves complete automation and finally put the power of intra-tape analysis without you being lagging. And we're going to talk about that today. So it's not that you need to be a discretionary and automated trader. Automation is an advantage in this type of an environment. Indicator-based systems, stuff that we've sold or released in the past, they're great strategies, great concepts, great performance. We've got a lot of traders succeeding, but it's not order flow. So it's not even an environmental discussion that could be compared at the same level. Okay. Now, what makes our automated engines different? We've built an engine, and that engine is being used as a foundation to signal generation for building and testing and automating performance reports. We can basically create multiple exits, trailing stops, money management, filters, risk and reward parameters. We can change momentum and trend conditions, overbought and oversold conditions. Whenever we have an automated system that gets deployed and we sell it as a product, ARC AI algos are not at all like every other algo built by any other vendor in the business. And we did that on purpose. Nobody will ever even come completely close to what we've accomplished in full automation from an engine perspective. Why? Because traders don't want black box. I could sell you a black box signal, but if you don't know how to use it or what's going on underneath it or how to change settings, then you're a slave to whatever you've purchased. Versus what we have is we've built an engine that allows you to use the templates that we've pre-built for you, but at the same time, build the ability to build and test your own systems and optimize your own systems, right? So we've created a signal system builder and tester that comes with every single automated strategy that we sell. And we alternate and we change the signal logic inside of the automation. Does everybody understand that? right? Does everybody kind of understand what I'm referring to? Because when you hear the term algo, a lot of people think, oh, it's an automated system, but that's just a very vague term. And Arc AI algos remove those shackles, right? It removes that. And so it really kind of separates our automated strategies from a completely different mindset or different perspective. Let me go in and actually show you an example of what that would mean, right? So let's just go here and we're gonna talk about some things here for a second. Let's just pull this up, right? Don't worry about performance here. We're gonna talk about that, and we're gonna go over that, and we're gonna get into that. What I'm referring to is everything up here. When we build an engine, when we build an algo, right? We create what we call strategy parameters. Every algo has a strategy rule sets and parameters and everything that goes into creating buy and sell signals. However, when you buy a black box or when you buy an automated system from whoever out in the industry, they're going to automate this only and they're going to black box it. What we do is we add all of the other abilities for multiple entries and scale outs and multiple target strategies and trailing stops and break even analysis. We have the ability to scale out. We have the ability to control the time in which your algo runs. We have the ability to control money management so we can set daily losses and goals. We have the ability to create momentum and trend filters, market structure filters. So we've done everything that is literally possible. We're now going to be adding levels, a goal. We've had some great feedback from a lot of our users that are using the engine on some of the other systems to be able to add areas of interest, which is a great feedback. And we're probably going to be adding that into all of them eventually. So this is why you should trust using our systems, because it's not just about the signal. It's about what you're able to do with the system that we provide you, okay? Now, how is this algo different from all the rest and all the other order flow systems that you've ever heard of and you've ever seen and you ever will see? Let me explain it. It's not indicator-based. Very, very, very important. Even order flow, every order flow software that has ever been built in the industry, and I mean every one of them, there is no order flow software that exists in the business that I've researched, and that includes platforms, that includes Bookmap, that includes everything. Literally every order flow software I've ever seen, and I spent 2 years researching, okay, is lagging. Because you're not able to basically freeze the data in real time to understand what's happening that's coming in. Yes, it is, Thomas. You're misinformed. We'll go into that after. The difference between what we've built and what you're using is you can see it coming in, but you have no way to control it. So yes, time in sales is real time. Yes, the DOM is real time. Yes, the order flow software we've ever sold or any other vendor that has ever sold software, yes, it's real time in terms of that you can see the data coming in, but you're not able to do anything with it until after the fact. Okay, you're not able to do anything with it until after the fact. And so therefore, even the software that we've sold, yes, even the print profiler is actually a form of lagging analysis. As despite how real-time order flow can be, it's still lagging. And I'll explain why. We're able to freeze the data intrabar so that we can actually test the inflow of everything that is happening as it's coming through the market, not after the bar is closed, not waiting for the bar to finalize or give you information after the fact. By that time, you're already late. It's not real time. And this allows us, there's nothing that exists that does this. And I'm very firm on that because I'm proud of that. And we've worked really hard to accomplish that. is that it's the first thing that allows us to truly test execution in real time that does not rely on an indicator or does not rely on the market to move. Wait a second, let me repeat that. Let's just call this level 2, which is your inventory or your dome. Okay. Once it executes, it then moves to your time and sales. Okay. And then once that executes in the time and sales, it then goes into your chart and the market's coming down. And let's say a bunch of buyers come in the time and sales, and then all of a sudden the market goes up. Any other system, indicators, supply and demand, volume profile, momentum, trend, the market has to move for those things to happen. But by the time you are able to make sense of that order flow data that's happening here, you're waiting for that to confirm itself, because you can't see what's going on here in real time and actually stop it in real time before the move happens. So what we've done is we've created the architecture, the infrastructure to stop the market. You can choose to stop it or not so that you can see it happening. And we're going to go into that in a moment and talk about that, because what this allows us to do is it allows us to test the performance on things that are happening intra-bar versus end of bar versus waiting for price to close and confirm. And this is a huge advantage to order flow trading. This is a huge win to market timing and entry execution. Because gone are the days where you have to wait for the data for you to make sense of it. Now, you can't do this as a human being. It's not possible. So there's nobody in here, even if you're the best of best traders and you're trading 20 accounts and you're posting performance all the time because you're so great, you're not physically capable of doing this. It's too fast for you, right? So this is a piece of software that would need to be used because it provides an advantage that's not possible at an individual level. Right? Because now you can manipulate the order flow and the volume and all the information that is controlled in the time and sales. Thomas has got I love you, Thomas. You're good. You're good shit. Right? Go Roy. Yeah, Roy can do this. He's a superhero. I love it. And so here's the concept. Okay. The market is different from one market to the next. What you're doing in terms of order flow in the S&P is different than what you're doing in the NASDAQ, in crude oil, in gold, in the Russell, in the euro, because they're not the same markets. They have different levels of liquidity. They have different levels of application. And therefore, order flow is not created equal, which means we need to be able to test the ability of that order flow coming in. If you just set your imbalances to, oh, I'm going to have a 3 stacked imbalances, it's got to be a 3x multiplier. That's just what everybody and their monkey does. Like, that's just what everybody thinks is the standard. Oh, you need a 3x multiplier. And yeah, but who said that? Like, you have no way to ascertain that information as being accurate in terms of order flow. It's just what people, random vendors, suggest because it's right. It's easy. It's, yeah, we could set this up and yeah, just trust it and trade it. And then everybody uses it and it's, oh, but why is my order flow not working? Right? It's because you don't have any information to prove that thesis. You have no credibility behind the subjectivity around that. Right? And so what we want to do is we want to know how to take that, the institutional impact, because that's who is putting the order flow in the market. I don't like to use the term, you need to trade like the institutions. Well, this is one time where I can actually say that, because this is what order flow trading is all about. It's watching what they're doing. That's what the footprint was determined to do, is to be able to determine the impact of institutions and their move on their liquidity, the execution that's coming into the market. Because that's the only that's the only traders that are putting big size into the market is the big guys. So we need to be able to understand it and stop it and test it and validate it so that you can see it. Okay. Now there's a lot of different signals that you've probably heard before. There's imbalances, trap traders, there's exhaustion, there's delta divergences, there's combination, right? There's a whole lot of them. And we're going to talk about those here today. But I just want to set the tone here so that you understand that this is truly unique. It's cutting edge, and it's going to change the way you look at order flow forever. So we can freeze the order flow. We don't need to wait for things to happen to see it. And this will allow you to test and validate true influx of liquidity. So let me just talk a little bit about this. How many of you guys have heard of trap traders and delta divergences? Okay. Yeah, the DAX too. DAX, absolutely, Dave. If you trade the DAX, trust me, I'm going to teach you how to set this up on any market. Okay. You've heard of delta divergence. You've heard of trap traders. For those of you that are new to order flow in here, this might be a little bit over your head. I understand that, but I'm going to assume the majority of you have at least been exposed to some form of order flow discussions, right? Delta divergence is just when price and order flow move in different directions, right? The market moves down, but it moves making lower lows on positive delta. Well, in everything that's out there, everything that exists, you need to wait for that bar to close for us to validate, is this truly delta divergence? Right? And that's exactly what you see here. You see a long entry because you're waiting for the market to close. Now, our algo can automate that because you can choose to enter at bar close or intra-bar. But our algo also allows us to automate that true signal when it started at the beginning of the bar. I just want to paint a picture here because I want to show you what everything it does normally versus what we're going to be moving towards, and hopefully shift everybody's perspective of how they trade order flow, because why would you want to wait until after the bar is closed? You've missed that entire bit of profit. And this is what I'm trying to get at. Same thing here. Trap trader. Everybody, most of you guys know that a trap trader looks at sequential declining order flow at the bottom or the highs of the bars. But then what ends up happening is that everybody has to wait for this bar to close to get the long signal. Now, I'm not saying you shouldn't trade bar close entries. You can test, you can to your heart's desire. But we can also automate intrabar trade signals so that you would have gotten the fill here and be able to ride that all the way up had you turned on intrabar analysis, had you turn on intrabar print, which allows us to execute intrabar when the conditions are true. That's the whole point, Ben, is you can freeze it. If the signal freezes, that's the difference between bar close versus bar. Now, you always ask yourself, well, it confirmed here, but you've missed out on the entire move of that bar. You've missed out on the entire impact of that order flow. Trap trader impact happened here. As a result, the bar lifted. As a result, the bar closed. As a result, you've missed out on that entire move. Okay. Now, I see a whole bunch of comments, and I'm not going to read them because I can't. This is too much to talk about here today. So if you guys are going to give me time to answer questions and all that, I'm going to read the chat box after. Not as a disrespect to anybody in here with experience or questions or impact or feedback. Just sit tight, learn a few things today, and we'll go through the presentation. At the end, I will go over questions and we'll go over all the details. Okay. Here's a great example of stacked imbalances. How many of you guys have heard stacked imbalances? Stacked imbalances are very powerful. Let's talk about them. You got a candle. A lot of people are going to look at stacked imbalances diagonally. We're also looking at them horizontally, because we have evidence to validate that it's more effective. You say, why? Well, if you have a candle, you've got price levels. What we're able to do is determine what is the multiplier at an equal sum game. Not just because market order execution goes to the bid and ask, if they're buying at the ask, if they're selling at the bid, that assumes market orders, but that doesn't necessarily mean intent at that exact price level. Now, when you have a stacked imbalance like this, or you have a stacked imbalance like this, you see that here because the bar closed. You see that here because the bar closed, and you can get some great trades trading bar closed stacked imbalances. Don't get me wrong, but that's lagging. That's lagging a lot, because what you're not seeing is that what could have happened is those stacked imbalances could have been down here at the beginning of that candle, which created the lift, which created more buying, which created the lift. And what you're not seeing is the full picture inside the time and sales as is happening, because the bars are always moving and they're always changing. So stacked imbalances are always changing because absorption and liquidity is always happening intrabar. So here's a great example of a combined signal of delta divergence and trap traders all on the same candle. But both of these signals were rendered true as soon as this candle started trading positive. And there was sequential decline in that order flow. So technically, the entry could have been here. And you could have gained a better fill. 3/4 of that candle could have been profit, as opposed to waiting for the bar close only to take heat back where the original entry would have been, which would have given you such a more profitable trade and such a lower risk trade as an execution perspective. And we're going to get into this. We're going to get into more details here. I'm just trying to demonstrate a concept, because I think everybody needs to understand the major difference between bar close and intrabar analysis. Okay. So let's talk about it. On the chart on the left, okay, you have there's two trades here. I'm just gonna show you these two here. Okay. On the chart on the left, I'm freezing the order flow. On the chart on the right, I'm not freezing it. I'm allowing the execution to happen, okay, on purpose for this example, so that we can see the visuals. At this time, there was sellers coming in aggressively in the print inside the time and sales. Okay. And you execute for a profit, you get the profit. But if you're waiting for the candle to close, this candle closed long. Like, it doesn't even make sense. Like it's a completely different perspective intra-bar. Like, you have order flow that's coming in heavily selling. A lot of sellers come in, drove the market down, then buyers came in and drove the market back up and then drive back down, right? You can also see here that in this environment, buyers stepped in, get a profit. But if you're waiting for the bar to close, the candle closed up here, you don't even have any imbalances anymore. There's no data there. Like most software, you're going to wait for the dots to come here and you're going to see the imbalances because it's lagging. Okay. And like I said, I'm not reading your comments because I can't teach and do that at the same time. I'm not an algo myself. Okay. So what's really important here is that rather than waiting for the market to do something before you execute, you're getting in where the market is creating the market to move, which is why it's called real time. Because what you're doing now is you're getting in as it's happening versus waiting for the market to do something, which then defeats the whole purpose of real-time order flow analysis, or getting in when the market is early. You know what I mean? Like, how many of you guys heard you want to get in before the move happens? Well, the only way to test that, or at least validate that, is to be able to see it as it's happening in real time, because if you don't, you're always waiting till after the fact. Right? Here's a great example. There's a stacked imbalance on the left-hand side. It happened intra-bar. At the time of this candle had that stacked imbalance. And The order flow algorithm that freezes the tape will allow us to see that execute in real time. But if you wait for the candle to close, there's nothing there. There's no stacked imbalances. And therefore, it's not even the same read of data, because as this is coming in, it's coming in heavy. And then the buyers try to absorb it on the other side, which then removes the stacked imbalance completely. But what you're not seeing is the absorption that creates the follow through from that stacked imbalance, which is the initial impact of the candle. And I'll get into training you on absorption after. I'm going to do some AMAs and we're going to talk about how to read this information differently, because it's going to change the way in which you look at order flow. It's going to change the way in which we teach it, because it's different. It's more effective. It's more granular. It's more accurate. Okay. So you can see here that like you wouldn't even be trading the same information because you don't have the full picture. Order flow is not the same anymore unless you're able to see it differently, right? And so let me play this video for you. I'm going to play a video. I'm going to share the audio. Okay. We're gonna share the audio, and we're gonna play this video. Let me know you can hear it. All right, traders, what we're gonna do in this, can you guys hear that audio when I just pressed play? Want to make sure you're good? Okay. Quick video. I'm gonna use this to demonstrate the demo for the launch webinar. And the reason I wanted to film this is because I set this up to demonstrate a specific concept that has been basically hard-coded in the algo. Now, most of the people that are new to order flow, you may or may not know that there's two stages before order flow gets transferred into your charts. The first one is your inventory, which is ultimately your dome, which is levels above and below price, right? And that'll be basically what we consider inventory, orders that are coming into the market. And then once they move from the inventory into the time and sales, it's basically executed. But the problem with this equation is that nobody can see the impact of that order flow in real time. And a lot of order flow tool sets or software that's basically been put out, you know, they transfer this data into the candles. And that's not a new concept. And we've pioneered it years ago with the print profiler. There's been many other products that have been released with regards to order flow. Heck, there's even order flow platforms out there. But what we've noticed is that nobody can understand the data as it's coming into the bar from level 2 and being able to track the impact of that inventory inside the time and sales. Because what happens is that you'll see numbers changing in these candles. They'll be constantly changing. And what ends up happening is order flow software that's out there will normally color information inside the candles, but everybody waits till after the bar closes before they make a decision. Now let me turn this on and show you why that's not effective. As you watch, you will see that there's orders above and below price. These are orders at the ask, these are orders at the bid, these are sellers, these are buyers, but at any given time, these orders can be pulled or manipulated. It's level 2, right? Level 2 can be manipulated. It's called spoofing or all of that stuff, right? Now, once this order is executed on the inside bid and ask, it then moves into the time and sales. But the time and sales moves so fast, you literally have to be a robot to understand it. And unless you're a speed of tape trader, it's not going to make much sense to you. On top of that, being able to make sense of this information, like what does 172 mean versus 1141, and what does this 18 mean against 140? Like, most traders don't want to have to become a statistician to be able to understand the data coming into the market. So as you watch, this is done on purpose. You're going to see that this chart freezes the order flow data. Okay, I'm going to freeze the tape. As imbalances are coming into the market, and you're going to see that it's going to execute 2 trades. It's going to execute 5 contracts on both sides. The only difference is this chart over here freezes, and this leaves it as a constant. And you're going to see this order flow data tell a completely different story once I'm in the trade. And you'll see how most people aren't even able to capture that information as it's coming into the print. Now we'll get into how to set it up. We'll get into how to ultimately create different volume thresholds, right? And how to create different multiplier effects, because, you know, having an imbalance is one thing, you know, but being able to throttle that information is much more powerful, right? And unlike most bid and ask,
Order submitted.
and there's the execution. Now you're going to see here that this candle froze the time and sales data. The market's moving up and down, but this chart over here, it tells a completely different story. We've let the order flow unfold here to make sure that you can see that you can't even see these imbalances in here after the candle absorbed down. You don't see it. It happened on the open of the candle, but after price moved up and down, you can't see where the impact of those buyers started, because they're being absorbed inside all of the other order flow. And so what ends up happening is a lot of traders wait until the bar closes to see, oh, there was a whole big bunch of order flow. But here's what happens. They wait for this candle to close, okay? And then what ends up happening,
order canceled.
Let me pause this now. What ends up happening is that they wait now for this candle to close, and they'll wait to see, is there any order flow data here that shows me maybe I've got, you know, a stacked imbalances here later. But they don't, you can't see that in real time. Now that's a huge threat, because by the time this candle trades up and then you wait for the market to come back down to an area of impact, the move's over. Like real-time order flow traders traded up this way, while all of the rest of the order flow traders are waiting to make sense of that order flow data, which means you're technically no different than every other indicator trader in the business. You're looking at order flow after it's happened rather than as it's happening in real time. Now, we're going to talk a little bit about the volume thresholds, because what we can do inside the strategies and inside the algo is we have the ability to control the imbalance percentages and the imbalance multipliers. And this is really unique because we can actually optimize the impact of that volume. This is what makes the HFT algo so powerful, is I can take, you know, you might use the S&P and set a much different volume threshold than you would on the NASDAQ and on crude oil. How can you tell yourself what volume data to use? You have no idea. Everybody just automatically uses a default of 3, right? Oh, it needs to be, you know, if this is a 10, well, this needs to be a 30 and it needs to be an imbalance. Well, I'm ultimately not just checking the order flow candles going like this. I'm also comparing the data going like this. And we have the ability to test horizontal imbalances versus vertical imbalances. And right now what you can see is I've set the volume threshold to that an imbalance comes in. It has to be minimum 10% of the bar's volume at that time. And I want to see an imbalance. This is set to horizontal. I want to see that the buyers are 10 times larger than the sellers. I want to see that the multiplier is 10x, so that when I do get an imbalance, 234 is 10 times larger plus 21, right? And unlike a lot of other imbalance softwares, you're going to compare them diagonally. What I found statistically after testing is that the imbalances set to historical horizontal levels produce better results. Now, you would not know that if you didn't have an algo or be able to freeze the tape to be able to make sense of that information. So as you can see here, there's a whole lot of other things we can go into, but I just wanted to film this video for the purpose of the demo. And now what we can do is we can transfer over into the live charts and take a look at some of the historical back tests. And then what we'll do is we'll open up our guest passes to the trading room so you can come in and we can basically show this to you live in real time once we go live with this across all of the companies. So all right, traders, let's transition back into the presentation. Okay, so I filmed that yesterday so that I could just do it a whole lot easier than try to demonstrate something. Did everybody understand that? Does that make sense to you? Okay. I want to make sure we're on the same page. Okay. So a couple things I want to talk about. What I'm about to show you is like a whole lot of different things. Like up until now, it's more been theory, it's more been information. But this isn't just a webinar. Like this is going to change the way you look at trading, period. If it doesn't, well, I don't know what else to tell you. This is as cutting edge as it gets in terms of intrabar analysis. And when it comes to trading, this is like a lion in the jungle that is like the king of kings. And you need to tame that lion, because you could trade this as an HFT. Like you could literally run this as an HFT. And let me give you an example of like what do I mean by like without filters, without anything. Like you could run this as an HFT, guys. Like I'm talking 20, 30, 40 trades a day, just taking all the major flows and like in, out, big imbalance, profit, like you can tone this. If you don't want to create templates or like trade on the right side of the trend, or trade, if you just want to trade the imbalances and control just the influx of volume coming in, let me tell you, you can do that. That's why it's not just a normal event, like, because you can't do that with indicator-based systems. Indicators rely on price to move, which means you need the market to do something, which means the order flow has already happened, which means that's not real time. And so when I mean like this, like yes, this is, I ran this optimization for like a week. Like it took 357 trades since last week. Like if everybody in here is looking for sample sizes to back test and optimize, like, and this is with an EMA filter. I'm just taking this on the right side of the EMA. Like I figured if I didn't have an EMA filter in here, I could probably be 500 trades, because you'd be taking every long and short and every single imbalance that comes in real time on the print. And that may not be advantageous, right? This is a great example of not having big volume thresholds in here. I'm saying that every time I take a trade, I need the imbalance to equal 1% of the volume of the bar. Well, that's not a really good threshold. Or this is just a simple 3x multiplier. I'm using this as an example because the multiplier needs to be 3 times. Well, I have other templates. I have other examples where I test 10 times the volume, 10 times the imbalance. 5 and 5 is a good setting. I have 5 and 5 set. Well, we'll talk about trade frequency and the amount of volume activity that comes in, because you're not at a loss of opportunity when you trade this type of a system. This is not like, oh, I hope the market moves today. Oh, I hope the market has a trend today. Or I hope the market's not in a chop. If you trade in a choppy market, you're going to get a lot of trades. If you trade in a trending market, you're going to get a lot of trades, because no matter what happens, order flow is going to happen. Period. Like there's no excuses anymore. Like there's no reason why you make an excuse. Well, the market was just tough to me today. No. Order flow is going to happen no matter what. And so you define who you are in this type of paradigm. You get to say, well, you know what? I'm going to try an HFT template and try to take 2-3 ticks and just trade that all the time. I've got an HFT template and I've been running a 2 tick. I'm going to show you a template for 2 ticks. You know, if you could just get 2 ticks every single day, 3-4 times a day, and stop at money management, what would that look like? I'll show you what it looked like over the last month of May, running an HFT 2-tick template, but that might not be what everybody wants. You might say, I'm a day trader, or I'm an intraday swing trader. I only want a couple trades a day. I want to trade for the bigger moves. I'm going to take the bigger imbalances. I'm going to show you how to set this up, because the sky's the limit with this. This is why it took so long for us to bring this to market, is because we were like, this isn't an algo. This is not just an algo. This is an automated system. This is an HFT. This is an intraday trading strategy. This is a signal generator. You can trade it discretionarily. I'm going to show you the trades that we're trading discretionarily. And Jim's going to be bringing this into the trading room, right? Because I'm going to be running the trading room next week with Jim. And I'm going to be trading this live in front of everybody. Okay. Because we're changing things. Like things are changing, because this is so different. This is so much better than anything we've ever done. So good that we're shifting the NeuroStreet trade rooms to trade this, because opportunity it's just tons of opportunity. Like there's nothing like it, right? You don't need to sit there and plot your levels and figure out where the market's going to go and have all this bullshit that goes through the ears between our heads that we all tell ourselves as traders, because order flow is different. And we can automate it or we can trade it manually. And I'm going to show you how to do both. Okay. So here's a great example of an entire month of just running trades. I just like you can see that could get pretty extreme, but I could take it from that extreme, or I could go down to this extreme. It's that simple. You could trade just the first trade in every new direction, which is a really profitable approach, mind you, because I have data on this, because all you're doing is taking the biggest imbalance on the new direction, taking the first imbalance after the transition, right? We'll go into that. Rick's asking, do you need to optimize? You need to settings. This isn't settings. Like, these aren't indicators. So like, we're not changing the settings of like the order flow. Like, you need to understand that liquidity is liquidity. If you don't understand, you have to set the liquidity to a certain amount or there's no imbalance. So you need to know, like, what should you be setting the S&P at versus the NASDAQ? Like, there has to be some form of testing to know how to run a different template on a different market, because like, what you do on crude is not the same as what you do on the S&P. But I'm going to show you that, and we're going to talk about that because it's very, very simple. It's very, very easy. How is it affected by major news announcements? Great. What do you think happens at news announcements? Order flow comes in. Like, I'm going to show you the templates that all of the money's made in the first hour of the day, every single day. Isn't that amazing? All the order flow comes in the first hour and a half every single morning. I haven't been getting up at 5 a.m. anymore. I've been literally getting up at 6 and trading an hour. Okay. Here's a great example of just getting in the first 30 minutes of the day, trading the print, hitting your daily target, and just stopping. Like, let me just explain this for a second. What I think is more powerful with this type of trading versus anything I've ever built, and I've built a lot of software, guys. You guys are using a lot of it, right? You may not like me, you may love me, you may think I'm smart, you may think I'm stupid, but I got a lot of experience with systems and architecture. And let me explain something here. This isn't about tweaking indicators and settings. It's about stopping after you've made your money. Like, money management is going to be your best friend here, because you will have opportunity every single day. And once you've achieved your goal, it's your job to stop, because you're going to just keep trading. Order flow is going to keep trading. There's always going to be more order flow coming into the market. The market can't move without it. So this is where we get to shift the paradigms to optimizing and curve fitting and back testing of all the algos versus, okay, well, wait a second. What is my daily goal today? Like, how many accounts am I trading? I only need to make $300 per my parent account. Trading 10 accounts, that's $3,000 a day. I need $300. Okay. I'm not saying you're not going to have losing days, Frank. I'm saying the way we approach trading isn't about tweaking the system. It's about deciding when to stop after the money's been made. Because I'm going to show you examples of how money management alters everything. Got to stop sometime, right? You got to decide, like, when is enough, right? Here's an example of me. This was the 31st of May. I traded it. I just ran it live. I was just running every signal that possibly happened, right? This is a 2-tick template. Just running large size, trading 4 contracts on 2 ticks, just running it, boom, 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 boom. And this is just a great example of, look at how much activity comes in from the imbalances, right? You may say, I don't want to trade on the wrong side of the market. I don't want to take the longs going against the market. I only want to trade momentum with the market. You'll still have a lot of trades. And we're going to show you some templates today. Here's a great example of a test sample that I did. And I'm going to show you a bunch of different tests of different templates that I've built. And I'm going to give you these templates and I'm going to talk about it, because this is a great example of me just, and don't worry about metrics and don't worry about risk and reward and everything, because I've got so many different examples of how you can tweak this. You could trade for 2 ticks, you could trade for 20. I mean, I don't want to get caught up in the minutia of, whoa, that's a high win rate or that's a low win rate. We're not here. This isn't a lesson on back testing. This is more of a concept on money management for a second, right? This is a great example of the entire month of May, right? The entire month of May, 130 trades, okay? And good run up, came into a little bit of a drawdown, came out, month ended, okay? This is like to I think it was like to the 6th. This is like to Monday, yesterday. I ran this to yesterday. Yeah, I took a picture of this yesterday, right? So this is a great example of one template with no money management. The exact same template The exact same template, just with a daily goal. Just stopping after you've made your daily goal. Let me go back to this. See how this is all over the place? Because that's what traders are doing. They're all over the place. Versus once you just have a consistent objective. Your job is to do something. I've hit my objective and I leave. Completely different narrative on how you approach trading. Now, this is fully automated. We're going to talk about semi-automated. We're going to talk about discretionarily, talk about fully automated in a second. I just want to talk a little bit about why money management is critical in a system that is always producing trades. It's kind of like you get up how many of you guys have got up sometimes in the morning and you're like, well, I hope the market trends today. I have a trend system. I need the market to trend. Or I hope the markets are not in a tight range today, and hope we get some volatility. Right? Right, all the time. Well, in order flow, that's not how it works. Because order flow makes the market do what it does. So even on a tight range day, even on a big trending day, you're going to get 10 ticks somewhere. Like, it's just inevitable. 10 ticks is everywhere, right? Like, even on a 20-point day or a 50-point day, like 10 ticks is 10 ticks, right? Like, as a day trader, you don't need to capture every bit of every move. You just need to extract consistently high volatility or high impact liquidity in the market. Okay, here's another example of another template. Now, this template, this is a unique template. This is scaling out. Like, this is not a scalp template where I'm only going for 2 ticks. This is 3 contracts, 3 exits. This is the entire month of May, right? Take a look at just trading a whole lot of trades, 453 trades. Okay, it's a lot of trades. It's a lot of trades. Okay. Kind of looks like an average trader's P&L, right? Basically got some good wins, some bad wins, no money management, no cutoff, no nothing. Money management will come in and take that from 1.5 to 2.3 profit factor over almost 200 trades. Entire month with a 2.3 profit factor with an 89% win rate. You know, like, max time to recovery on this is less than a day. That's insane. From an algo perspective, that's insane. Every day, just going after 300 bucks. That was yesterday too. Made its nut. 300 bucks yesterday. I can, yeah, because you got to remember, like, when you know what you're trying to accomplish versus, oh, I need this to line up, and oh, I need this trend line break, and oh, I need this divergence, or I need this detour, I need this freaking point of control. Like, you need so much to happen. You need to be the Wizard of Oz, right? Well, you're not controlling the market. You have no control over the market. So everybody has their analysis, and you're going to become a great trader. Some of you will become super, super great, and you might become that trader who just has their pulse on the market and you can really anticipate things, right? But let's just be honest, 99% of you will not be that person. Like, there's a very, very few people will ever have that type of skill development where trading becomes that easy. So how do we remove that problem? Well, we need to be able to look at a solution that it's not just for automation. You need to understand what the data is telling you. And I'm going to go into examples. We're going to look at charts. We're going to look at some today's trading. I'm going to show you the trades I took, right? And I really want you to understand that there's going to be a lot of training that goes on with this product. In fact, I think for the next couple of weeks, I'm only going to be doing webinars on this product. I'm only going to be running training on this. We're going to be doing AMAs on this. We're going to be running trading rooms on this, because the key here is that it's built for algos, but it's also built for the Bobbies and the Gilberts and the Roys of the community that trade areas of interest, and they wait for their levels, and you could time the market differently without having to step in at the wrong time, but you can automate that entry with the data that's proven, right? For those of you that like supply and demand trading or levels trading or low volume node trading, and You don't have to just put your order in blindly. You can set the algo up to automate the execution when that order flow comes in or when the exhaustion comes in. And I'll show you how to set the settings to do that, right? You can do this as a discretionary trader, right? You can do this as an automated trader. This is why I'm so excited about this, because it's not an indicator-based system. And it will change the way in which we approach day trading. It'll change the way order flow trading should be, right? So let me talk a little bit about now something that I decided to add. And this is going to revolutionize the way that Jim and I run the discretionary trading room. For all of you non-algo traders in here, we're going to automate the entry too, because you'll probably be too slow to execute on some of them. But how many of you guys have ever seen order flow software? Ours included. The print profiler has some of this, not all of it. We've changed a few things. How many of you guys have seen the data box before on order flow software or platforms? Right? How many of you guys find it confusing? Anybody here find it confusing? You're like, what do I do with it? Some of you guys, yes. Some of you no. Well, first of all, you're not going to see state in anybody else's software. That's ours. We look at delta price correlation. This allows us to be able to look at whether price and delta are correlated in the market. The delta percentage, this one down here, what most people don't understand is how powerful that delta percentage is. Delta percentage is very, very, very important when tuned correctly, meaning when that delta percentage lines up with everything else, it's go time. Now, what really, really made me kind of question, like, why does all the platforms that I've seen do this wrong? Like, cumulative delta is done wrong on most of the things that I've seen out there in the industry, because they're taking it over such large lookbacks that has no relevance in real-time day trading. And why is that important? Well, if you go into NinjaTrader or any of the platform defaults, cumulative delta starts at the session start time, which to me makes no freaking sense at all. It's irrelevant for me to look at what's going on now. What happened at the open of the Aussie session means nothing of what's going on now. Like, cumulative delta could be red all night, but yet that's incorrect, which is an incorrect way of doing it. So what we've done is we've throttled it so that I can basically set the sample size for cumulative delta to be real time. Exactly. It's false reading. Exactly, Neon. And so our cumulative delta is much more improved than anything else that's existing. You're going to see why that's important, because you're going to get information like this. Whenever we have mixed colors, it's because the market's trying to figure shit out. But as soon as we go from what we call mixed to solid, or mixed to solid, okay, I'm going to show you today. I'm going to show you the amount of trade opportunities that happened today on this alone. And I'm going to code the automated entry right now, because this is an add-on. It's going to probably be added over, probably be ready for next week, because this was something that I just wanted to add that I find is, I don't want to say this, but it could be even more powerful than intrabar imbalances, because we're able to take the power of confluence of that. You can automate the intrabar balances, and then you can ultimately automate the confluence signal, which we are automating because it's amazing. We're going to get into this. Let me show you some examples. I traded this yesterday. I'll show you the trades I traded today. I took trades today on this as well. You can see the mixed information in here. You can see the mixed information. You can see the whites. You can see the whites down here. It's all mixed. As soon as I get the first solid run of all things lining up, the only thing that never changes color is the volume, which is the bottom, which doesn't have to change. We just want the total volume. Let me tell you, like, it's a good it's a good signal. Like so good that I've been trading it live very, very successfully, discretionarily, not automated. And it'll be even better when I can automate the entry, because I find sometimes I'm even late to the fill when I do it manually. But let me give you an example. Here's a picture of when we go from mixed to where that opportunity happens in the data. Now, remember, these are automated imbalances that are happening on the print. But what we're doing is we've decided to add the confluence signal. You can just draw a line. These were longs. This was the short. This was the long. This was the short. This was the short. It's a badass setup. Like it's very powerful. We call this the trend setter. Why do you think it would be the trend setter of the market? Why do you think that lineup of data creates the market movement? Because it's the influx of the big order flow that's coming in across everything in parallel, in confluence. Delta correlation with price is in the right direction. Delta is in the right direction. Cumulative delta now lines up properly. The bid-ask percentage lines up, plus the delta percentage of bar volume is above a certain threshold. I normally set it to 9% or above. 9.5% has been really my sweet spot on the S&P. I'll show you what that means. But I can tell you right now that this is no joke. Like when I put the lines yesterday, this is volume profile levels on the S&P. This was yesterday's trading chart. I put the value, I put the point of control. I put the point of control. I put the value area low and low volume node. And then I just waited. I waited for certain things to happen. Came down to the value area low. We rotate off that value area low. We come up, we're on the right side of structure. All of the order flow is transitioning. Get the first confluence. It's the trend setter. Now, I don't expect you to be a rocket scientist and train your brain to see this. We're coding a signal to see this. I just wanted to do this in the presentation as well, because this will also be a part of the algo. You'll get it next week. It'll just come as a V2 update. It's just we're adding this as an extra signal for you guys. Why? Because I'm going to run our trading room with Jim on this. This is a badass trade. Like this is so badass that it happens all the time. And it moves the market. It's what's moving the market. And what's nice is that we go from these periods of confusion to confluence. Confluence sets the trend. We go from here, sets the trend. Here, sets the trend. Comes down, building a position. Data's all messed up. What happened on that bar? Don't need to be a rocket scientist to see the direction of the market. Enter at bar close, because this signal requires bar close. We need to make sure all that data lines up for the follow through. Now this doesn't mean you have to choose which one you like trading. This is an additional setup in the system. You can trade imbalances real time, like we just talked about, freezing the tape, or you can trade what we call the trend setter, which is, in my experience, the closest thing to getting in before the move happens, no matter what you're trying to do. Now you put that on the right side of the market, you put that on the right side of structure, it's game over. So let me just show you some examples. Okay. So let me just kind of just paint a picture. Real simple. Everybody here knows what a volume profile is? I'm assuming so. This is the weekly auction. Let's just keep it super easy. Let's map out the value high. Let's map out the value low. Okay. Let's map out the point of control. Real simple, right? Just get that out of the way now. It's not important. I don't care what else is happening. I don't need to know where low volume is. I don't need to know where all that is. I just need to know decision points where the market's supposed to do certain things. Why would that be important? Because that's when the order flow matters. So what I'm going to do is I'm going to extend this just a little bit more. Can everybody see this now? Is that okay? Everybody can see this? Okay. Well, make sure it's not too hard to see. So what I'm going to do here, these are different setups, different ways I've tweaked the software, different ways I've set the volume, and I'll get into why and why you could do the same. And this is a 2-tick HFT scalp template. I'm literally going for 2 ticks, like HFT. You're going in, you're getting a surge of inflow. Now, this type of a template may not be comfortable for everybody. Why? Because you're trading with big stops and small targets. So you get stopped out, it does wipe away some of your gains. That's a preference. That's a trader's style. There are scalpers in here that will scalp for 2 ticks. Do that very consistently. Just know that when you do take a loss, it stings a bit, but it's not that it's not consistent. It's not that one is right or wrong here. I really want to move away from this is the right way to trade versus the wrong way to trade. And I want to just let you know that they're both there for you to take advantage of should you choose to use something of this discussion, right? So let me give you an example. This today ran off the open. This ran off the open. Let's go back here to the open. Here is market open. And here's the 8 o'clock cutoff, which is 11 o'clock. Okay, in 2 hours. Now you're going to see here, like during the first hour or a half an hour, win, 5 wins. As a trader, do you need to keep trading after you've had 5 back-to-back wins? Yes, no, not necessarily. Like if you can get up in the morning and you trade, let me tell you something about time of day with Orderflow. This is no money management filters, 161 trades for the entire month with a 94% accuracy hit. 62 consecutive wins. Now, this is an HFT template. This is not meant for all of you risk and reward maxis out here that are trying to challenge my experience in what makes sense versus what doesn't. I'm not here to try to convert you. I'm here to show you examples of different profitable approaches that you'll be able to decide if this is how you want to trade order flow. Here's a great example of the entire month with no money management, okay? No nothing. No cutoff, no kill switch, no nothing. Look at the time of day when all of the money's made, right in the first hour. Okay. Now, if we go today, the exact same system, the exact same template, the exact same market settings, everything, but you implement money management. I think this is 2 contracts, Ben. Yeah, this has been 2 contracts. Yeah. Yeah. The exact same template with money management. You come in, you make your money, you stop. You come in, you make your money, and you stop. Let me take this, show you the exact same strategy performance for this. The exact same template with money management. Okay. On average, you're getting 4 trades off the open. Majority of the time, it's off the open. Okay. Entry time. Half hour of the day. Like all your trades are in the first hour of the day. Like the money management's achieved before 7:30 every single day. Like this is why like everybody always says, I just want to have a system where I can get up and I can trade the open and then go live my life. Instead of sitting there like a slave to the market. ALGO, you need the market to move. VWAPper, you need the market to move. Trend stepper, you need the market to move. You know, Wicker, you need the market to move. The market needs to do things. This is what's making the market move. The difference here is that it's not an algo. This is the heart of the market. This isn't an indicator-based approach, right? 91 trades, 96% profitable the entire month of May. Now, you're going to say, there's no way I'm risking $300 to make 40. Well, let me ask you, if you're a scalper and you don't like being in the market, this is what you've been looking for your whole life. If you're someone that doesn't mind being in the market, Okay. If you're someone that doesn't mind being in the market and you like, I don't want to be an HFT scalper. I want to do other types of trading. I want to have a little bit of a bigger stop. I want to work on, basically scaling out. Here's a great example of 3 contracts, couple point stop, 400 trades for the entire month of May, right? Looking at this approach, no daily money management, no nothing, just letting it run. This was today. Yeah, today. Yeah, today's the 7th. Okay, so yeah, I ran this optimization tomorrow. I guess it stopped this morning. So this is today. It made this template made 700 today on 3 contracts. But what I'm trying to get at here is that this is a different approach to trading. This is when you look at the strategy on this and you look at the way that it traded today, okay? Didn't hit that target, didn't hit this one, got stopped out, caught that big move, caught that big move, caught that big move, caught the open. Okay. This is the S&P, guys. Yeah, this is the S&P. And why? Because it's the biggest volume market that exists for liquidity in terms of trading large size. So if you're trading lots of size, you can scale up on this market. That doesn't mean you shouldn't trade the NASDAQ, you shouldn't trade crude. But I just want to go back and show you an example of this, right? Now, we'll get into like, is this the type of template you want? Well, let's talk about if you took the exact same template and ran this with a money management approach, okay? We run this with money management. Let's go in here. Money management coming in. Got break even before cut off. That's fine, right? Money management was met consistently. So this is why what I want to do is I want to be able to sit down and show you how to set up the settings on this so that you can understand why you would want to set something up in the first place. Because it's not about the EMA, it's not about anything. It's about knowing that you can control how you want to use the order. Now, here's another example of a completely different template that I built literally today. Didn't test it, didn't do nothing. I just went in and I said, okay, I'm going to go up and I'm going to set order flow to do something specific. I want the order flow to be 1% of my bar's volume. I'm not trying to test the big volume coming in. I need to make sure that my multiplier is a 3 and my stacked imbalances is a 3. I'm scaling out with 3 contracts and I'm going in with a 20 tick stop and I'm taking a point, 2 points, and then almost 2.5 points on my target. And all I'm saying is I'm going out and I'm going to trade on the right side of the EMA. I want to make sure I'm on the right side of trade, right? And I'm also blocking no more than 4 trades. Like I don't want to trade 4 trend trades in one direction. Okay. I don't want to trade, more than 4 trades in one direction because at the end of the trend is going to bend. It's no longer your friend, right? So like you can decide that. You can set that up. If you only want to trade the first trade in every single direction, you can do that, right? So let's take a look at some of the trade activity. Let's just go in and take a look at the imbalances that came in on the bars. This has less filter. If I look at this chart and I take a look at the volume thresholds coming in on that chart versus this chart, I've got this set to 10. So I don't see the same data. This is set to 3. This is set to 10. Right? Different input, different data. This doesn't change. This is a completely different setup. This is a completely different approach. Now, right here, you can see that if I set it up to a smaller threshold, I'm going to get more signals. There's no signals here. Why? Because I've set the volume to be more restrictive on the left template. Why would you do that? You can test that. You can validate what you should be setting the volume at. And what's nice is you don't need to optimize for a long period of time to prove that. Why do you think that is? You don't need to run these large back tests and these large sample sizes because holy shit, today alone, $24 trades, including all exits. So if you divide that by 4 or 5, like you're looking at 6 trades before you cut off. Like 6 trades a day times that's 30 trades a week minimum. You could be trading a couple hundred trades a month. You don't need to optimize large sets of data to know what the volume is going to be because you're going to be able to come in and test. And what I like to do, and a good starting point for me, and we're going to do this in the classrooms and we're going to do this moving forward in the AMA tomorrow, is I like up to a 5 maximum. Testing 1 to 5% of the bar's volume, which is really, really great. And having a minimum imbalance multiplier of 3 to 5. Keep it super clean. Once you start getting above 5, you're really telling the software that, like, I need really big volume to step in for this to work. That doesn't mean it's wrong. It's just going to throttle back the amount of opportunity, which is not a bad thing because you can see how much order flow comes into the market, right? Like you can see the amount of imbalances that are coming in, and that doesn't necessarily mean that you want all that imbalances coming in. Like you don't want to be trading every bit of order flow that comes in. You want to be trading the order flow that matters, right? And so these are things that I'm going to be teaching you guys how to set up because it's really that simple. There's nothing else that you'll need to do. And this is, let me just kind of keep it super, super, super simple. You have trap trader signals. You have imbalance signals. You have delta divergence signals. We can choose to enter intrabar and freeze the tape, or you can do it on a bar close entry. Anything that we do from an imbalance can be done horizontally or diagonally. And all we're doing is deciding what the volume threshold should be to determine that. That's it. Super simple. Very easy to understand. Between you and I, guys, if you really want to know what I love imbalances. And I love the confluence trades. Like because the imbalances, I set the volume settings where I can actually test the effectiveness of it. I don't want to just have some rudimentary, oh, I'm going to trade 3 stacked imbalances. Like, no. Like, I'm going to validate over the last week of data, a couple hundred trades, what was the best volume thresholds being used on the S&P? Like, I want to know the data coming into the tape. I don't care about the indicator or the direction or the flow of the market or the trend. I want to know what the S&P is telling me. What is the time in sales telling me so that I can control the way in which I approach trading? Okay. Now, let me tell you, you could trade this entirely through the entire day of the session if you want to. I mean, you could keep trading order flow all day long if you really want to, but I'm here to tell you that after all of the testing I've done, the majority of all the market activity happens in the first hour and a half to 2 hours maximum of the day. But you guys know this. How many of you guys know this without me having to tell you this, that all the volume steps in the morning? Right? You don't need me to rehash what you already know. The order flow is coming in here. Why do you need to wait for the market to do something all day in order to get a signal? Not anymore. Not anymore. Now, here's what I want to do. I want to show you something that I did today that was done on purpose. I set my levels up on the profile. I had the order flow chart left and right. I had an order flow chart on the left. Okay. And I just had a chart, a blank chart. Imagine that. No indicators, no nada, just an entry tool. And what did I do? I traded manually. What do you mean I traded manually? Well, I'll show you what I did. Yesterday, I traded manually too. This is my manual entry chart. Okay, let's go to today. So let's go to the top of the hour. Let's go to the beginning of the day where I started. And I just want to explain why this is a really, really great concept. Okay, this is Let's go here and here, up at the top. There it is. Okay, so this was an imbalance algo that was running, but the chart on the right, I was trading this. Now let me explain what I'm going to be doing in the trading room with Jim and with everybody that wants to use this. We'll do more training on it because it's so powerful. It's very, very powerful. Okay. If you take a look, this candle here, let's draw a little line on it. I entered here. I entered on that candle because it was the first time the data lined up and I had my delta percentage above my threshold. So I entered long. I took my 4 to 6 ticks. Okay. Then I waited for the market to transition. How do I know the market's transitioning? Data's all over the place. Then I waited for the market to break structure, show me that price is showing the bears are stepping in. And I got short. I got high ticked. Wow, imagine that. I got high ticked. But guess what I did right after that? I entered again. Why? Because the data told me to. It went from being mixed, building a position, to the follow through, which is the trendsetter. Made my money back using order flow data. Now, came back in. Remember, these are imbalance trades. So at the same time you're trading the confluence, the imbalance algo could be taking trades. Like this is why, like you can do both. You can do one or the other. Let's wait for it. There's another trade. Let's go back to it. Let's go back to it. Let's wait for it. And right there. What are you seeing on this candle? Right there. Got my 10 ticks. I didn't take 10, I got 6, but gave you 10 ticks. I'm here to tell you that this is a very, very, very high probability setup that happens every single day. And when you trade it on the right side of the market, you just catch the moves. So let me just show you what I mean by that. Let's just go in here and just take a look at the colors. And we're going to code the signal. So you'll have this when you use the algo. It'll be added in the next day or two. Let me just do this. I want to be on the right side of structure and the right side of trend. Every time that happens, take the short or the long. What's the overall direction today? Down or up? Down. So just trade the down move. Like just trade down. Like, why do you got to trade up? Like there's a lot of opportunity. Like Orderflow is going to give you so much opportunity. You just get it. You don't have to worry about not getting it. Right? There. All those trades today. This one was a high tick scenario. This one was trading into the point of control. Low volume node. A lot of room to move here. A lot of room to move. The order flow data will show that to you. And what's nice is that next week I'll be able to provide statistical testing on this as well. Because I had them add it. I wanted them to add it into the engine. I wanted them to add it in because it's just completely an extra awesome signal that allows you to be able to do that. So we can automate all of that or trade it manually. And I just wanted to show you the ability to do both. And it really just boils down to how much trades do you want? Give me a yes that you can see the power behind this. This is not just information. This allows you to take control of everything that you thought you knew about the market. You can validate it with the data, and you no longer need to question, well, I wonder what I should set the S&P to, or the NASDAQ to, or crude to, because you can test that within 30 to 45 minutes. It takes about an hour to run an optimization over a week to get the information that you need to basically trade it live. And I'm not saying optimizing settings. I'm just getting your pulse on the volume. Like, you want to know, like, should you be setting the bar volume to a certain amount on the NASDAQ versus the S&P? Yes, it's different, right? So how many of you guys would like to win a chance to get a free license? I don't have a poll today, so I'm just going to put everybody into it. Ashley, we don't have the poll set up for that. So I'm just going to basically give everybody a chance. Ashley's going to send an email out to whoever she chooses out of the entire registry. You have to be an attendee, right? You have to be an attendee for that. Okay. Okay. So in order for being a,
Hey, Sean, let me just grab that for you. That just needs to be changed one word, and I'll have it go live for you. Give it 1 second.
Sure. So Ashley's going to fix that. I literally think within 24 to 48 hours, you could have watched the videos with us, and you could have at least read the user manual, installed the software. I just don't think you're at a disadvantage. I think in a very, very short period of time, this could be a very, very easy tool to use. I think a lot of people get worried about order flow. They think it's confusing or it's overwhelming. We've simplified it, right? We've simplified it. Is it changed, Ash? Yeah.
Yep, sure is. Go ahead.
Enter to win the prize. I just see 3. I've got 3 polls there.
Yeah, the prize one.
A $10,000 prize. I'll edit it. Don't worry about it. I got it here. Give me a second, guys. Okay, guys, so I'm going to run this poll. Just fill it out so we can pull the draw. If you want to win a free software license, just put it in yes. Ashley will pull that draw, and that way she can pull that out. And if anybody in here, buys it and we pull your name, we'll refund you. We've done that in the past. No issue, right? So only 60% of you have answered yes. Anybody here not want a free license? If you cannot enter, don't worry. You're here on the, Ashley will get you, William. Anybody here that's maybe says fault? Yeah. Getting an error. Might just be you're on a tablet or anything like that. And for those of you that put no, I feel sorry for you. That's okay. You'll get it. Yeah, anybody that can't enter, Ashley will be able to pull the attendee chat. We'll be able to, yeah. Excellent, guys. Perfect. So here's something that I want to talk about, because it impacts everybody. It impacts everybody. How many of you guys, when you run the algos, you feel like you're alone? You wish you had a room, or you wish you had a home, or you wish you had an environment for trading, right? Because there's a lot of algos and there's a lot of systems, right? Well, for us, one of the things that we've been looking at is taking the trading room that we're running with NeuroStreet and transitioning the environment to be order flow centered because of this product. Now, we're not saying we won't look at everything else. We're not saying that we won't look at everything else that we're doing and all the other software and all the other stuff. But what we want to do is we want to provide a room that not only caters to the algo, but it ultimately caters to a lot of activity and a lot of consistency. And so what we're going to do is Jim and I are going to bring this algo into the NeuroStreet trading room, right? And I'm going to run the room with Jim next week. And we're going to basically, I'm going to share with you all of the experience that I can bring to the table with Jim and teach you what to look at. We're just going to run it on the S&P. Why? Because there's so many freaking trades on the S&P, you don't need to be trading anything else. Like if you can't trade 20 trades a day and that's not enough, then I don't know what it is. So the key here is that NeuroStreet is not just for algos, it's for everything. So what we're going to do is we're going to run it in the room next week. And anybody that's just using the algo, right? And anybody that's not just a member of NeuroStreet, we're going to invite you into a guest pass if you purchase the software. Why? Because I think you need to be there for that week of live trading with me and Jim, because it's going to give you the foothold to take the wheel and drive without you having to do it on your own. So what I'm going to do is, even though NeuroStreet is a bigger package, it's a higher ticket school program, and it comes a whole lot more than just an algo, we're going to bring the algo in, and everybody that buys the algo will be able to come in next week and trade with us, even if you're not a member of NeuroStreet School, so that you can come in and trade Orderflow with us, and you can learn from me and Jim and pretty much me and my team that's built this. Jim and I. Exactly, Stuart. Jim and I. Me and Jim and all my people, my peeps. Okay. So I just want you to know that we're not just going to say, here's an algo and here's a great recording and take these templates and figure it out. Because I'm not going to run the room just as a fully automated template. I'm going to run the room with an automated template. And I'm also going to run the room with a discretionary strategy entering on the Confluence trades. So I'm going to trade both. I'm going to have them on 2 separate accounts. We're going to show you differently. And I want to be able to walk you through what's happening in real time, so that you and I and everybody in there can basically learn and watch and see it, right? Does that make sense? So let me ask you this. If I do that, I want to know, okay, how many of you guys are in on this? Let me know, okay? So this is for all of you guys that are, because I want to know how many people are coming into the trading room with us. And because you're not all going to be members of the trading room, right? You're not going to be all members of that. And I want to know, we'll open up the guest pass for everybody that's coming in on this software that they buy it. And, but I need to know, because I'm going to open up the room and I'm going to step in and run it with Jim. I'll come in and run the room and I'll trade it live and I'll bring my experience, and I'll step back into the room and actually step in and run order flow and trade, right, with you guys. Right. Okay. So we got a lot of people that are going to come into that room, Jim. We got a lot of people. Okay.
Figured we'd be pretty busy in there.
Yeah. So you and I are going to be prepping the workspaces and everything else. And no, this is for everybody that's going to come into there's going to be another poll here. I just need to know, because this is Orderflow and this is a game changer. So I want to make sure that my team and I can assist everybody getting in, making sure you got the passwords to come in, making sure you got the links to come in, making sure that you get the Orderflow installed. And Ben and everybody needs to know that, right? So this is just more for the guest pass. So this is for the guest pass for the trade room for next week with us. And then ultimately, I'm going to run one last poll here, guys. And I'm going to run the pricing. I'm going to pull it up so that everybody can see what it's going to cost. So this is what the cost of the software is. This is for the HFT algo, both automated algo and semi-discretion signal generator for the heat map and everything else that's coming. This is ultimately a 50% launch discount. This comes with the AMA tomorrow. This also comes with the trading room next week. This comes with multiple licenses for 2 computers. It comes with the extra templates that we've built. This comes with everything that comes with the order flow. Okay. Now I'm going to be hosting an AMA tomorrow. Okay. That's going to be breaking down the system, the training, the user docs, and everything for people that have purchased the software. Okay. You have to come and you got to buy the software in order to get training on it. Right. And then next week, we're going to run the trading room together with it. So this is kind of like an event for everybody to be transitioning into using Orderflow the right way. And I'm not here to try to say, stop trading everything that you're doing. I'm here to say, like, if you really want to get a handle of this and be very good at it and be able to maximize order flow execution, you got to get the software 50% off. And then tomorrow I'm going to run an AMA to make sure everybody's trained on it. And then Monday next week to Thursday, Jim and I are going to run the room and let everybody come in so that everybody can join us that's even not a member of NeuroStreet. Okay. You do not need a lifetime license in NinjaTrader to use our software. No, you do not, which is great. Yeah. So what I'm going to do is I'm going to put this up here, guys, and I'm going to run a poll. And I need to know, this is everybody now, members of NeuroStreet, non-members of NeuroStreet. How many of you guys are going to be getting this software so that I can prepare with Jim and Ben and everybody so that I can ultimately set up everything and prepare it for the AMA tomorrow and ultimately prepare the trading room for next week for everybody, because Jim and I are going to be preparing some templates we want to be going over. We want to make sure everybody is involved in this, that has all the resources for this. And we're going to be doing a whole lot more training on this ongoing. I think for the next couple of weeks, we'll be probably doing some extra training on this as well, and strategy classes, Jim, because it's going to take a little bit of TLC and make sure everybody's, you know, off the races, right?
Yeah, Orderflow is pretty awesome. And this thing, you know, you guys know me, I'm pretty straight laced. I don't give hype or that sort of thing, but I can tell you from my own personal experience in using this thing so far, it's a game changer. I mean, it's definitely given me additional insight in the market, and I've been trading Orderflow for years. So I'm excited about it. It's very, very cutting edge.
So, you know, it was interesting when we had the discussion, naming it, right? They say, why did we name it an ALGO? Because it is an ALGO, but it is also not an ALGO. And that's what I really think is so powerful here, is that it takes everything that we've ever done from an order flow perspective and amplifies its effectiveness without all the extra bullshit that's not necessary in the software. Right? Like, I love our order flow software. Print Profiler was one of the best products we've ever built. It's one of the most comprehensive order flow tool sets in the world that has been built. Almost everybody in here owns it, right? It's got so much stuff in there, but yet it doesn't do what order flow needs to do. Okay. And when we built the ALGO, the HFT component, it truly was originated to be an HFT algo, because I was like, we're going to just automate the time and sales as it's coming through, and we're just going to take all that imbalances and impact, right? And what'll end up happening is it just evolved, and that's why we took an extra year to bring this to market. So, Keith, I'm going to go through these questions here. Yeah, because it's not, Keith, it's an algo. We don't need to bring it into the trading room. We're just doing so because it'll make you a better trader. Yeah, you don't need to buy it, but it's not a discretionary tool. It can be used as a discretionary tool, but it's not an indicator. It's an algo, and it took two years to build this. Yeah, literally 2 years to build. And all of the other software will still be looked at. We're not deviating. If you're a member of the trading room and you're using the CWAPs and you're using all the other great stuff that we have, you're not losing that. Nobody's losing that. This is just, we're coming in and I'm going to teach you some really, really valuable things that could make you a whole lot more money if you're interested in learning it and you're open-minded to learning some really, really new things. And the nice thing is that it'll allow you the ability to learn how to trade the algo, and it ultimately will allow you to trade discretionally as well. Yeah. Yeah. So guys, I really want to thank you for joining me today. We've got a lot of people that are engaged in this, and over the next couple days, what I'm going to be doing is I'm going to be fine tuning the template in which we're going to be using inside of the room, mainly because like there's a lot of different templates. Like there's scalping templates, there's day trade templates, there's swing trade templates. But for me personally, like I'm really more interested in you know, scalping to day trading. For me as a day trader, like I'm not interested in trying to predict the market. Like as a prop trader with trailing drawdowns and people that are trying to get funded and all that stuff, like I'm more interested in trading with like one ATR. Thanks, John. Yeah, it is intriguing. Yeah, thank you for the kind words. Yeah, it's cutting edge. So let me just kind of stop here for a second, right? Like let me just kind of put things into perspective. Like if this is a 10-tick range bar, and I tested a 2,500 volume chart and a 5,000 volume chart as well, mainly just due to the fact that mainly due to the fact that like it's a 1 minute time frame. Like 10-tick S&P is a 1 minute chart converted to range bars. A 5,000 volume chart is like a 2 minute chart. A 2,500 volume chart is you know, is equivalent to 1 minute. We can run a volume chart and we can run a range chart, but guess what? You're going to see the order flow come into the bar at the same price tag as the time and sales. So you pick and choose your battles. Like, is one better than the other? Are you going to trade a volume chart over a range chart? It's a preference. You could trade a time chart. It's all going to be the same, because here's the reality. Order flow is coming into the tape at the same time. Time and price. Order flow is coming in at time and price. It has nothing to do with the bar, right? And Nancy, yeah, great question. She's like, Nancy says, will this require tweaking of the templates? I would argue no, mainly because order flow data is about volume. And so when you can optimize a certain sample size of volume data coming in, you optimize that once and you get a foundation that's solid, right? I mean, I would argue that setting 10x volume was pretty aggressively strong. So, you know, you might want to do that as a one-off test, like my scalp HFT templates use that. But, you know, if you want a little bit more activity, like anywhere between 3 to 5 is going to be the sweet spot of multipliers. What really we want to test is how much volume needs to be traded on the bar before we get the imbalance. We don't want to just have a bunch of zeros and then just no volume coming in, right? Which is why we want to have enough volume. And it's really more about the volume, Nancy, than anything. It's not about tweaking and testing indicators. And at that point, it's, do you want to trade counter trend or trend? Like for me, I'm always going to, if you think about this, like let's just put things into perspective. If I've got a candle and I've got buyers stepping in here, buyers are moving with the market, right? And we want the surge to go with the market. Well, if I'm on the right side of the trend, I probably have a higher probability of the buyers working in my favor, right? Versus counter trend. Another thing that you're going to see me do in the live markets when we're trading is I'm going to come up here and I'm going to turn it off. Why? Because I don't want to be trading imbalances way up here away from the trend. I want to take imbalances close to the trend and trade out. I don't want to get sideswiped and trade getting stopped out at the lows down here, trading imbalances with huge distance from the EMA. Because for me, that's a flush. And that's the difference between trading the move versus counter trend. And, you know, this is a discussion for preference. Like it's not, because you can trade order flow on both sides. If you were trading counter trend, you would have taken the long and traded back to the inverse versus trading the direction with the market. I'm here to tell you that I'm always going to trade with the market as opposed to against the market with this type of an approach first and foremost, because you have a higher probability of flowing when big money's stepping in and it's pushing the trend. I also want to trade the signals on the right side of the market because it's just such a higher probability of success that I've seen. No, you don't want to trade these with Renkos because Renkos have phantom fills. You're not going to see order flow in half the candles, right? So there's no point. You're better off just having a range or a volume chart. Yeah. If you add it to Renko's, you're just going to see a bunch of zeros in the bars that don't have real price. Right. So by definition, when I'm yeah, I would work on pullback bars, Thomas. Yep. So a couple questions here, and a lot of people are going to ask this. Let me just delete the drawing tool so everybody can see this. A couple questions people are going to ask me is, well, what does need to be tweaked and what does need to be set? And here's the way I look at this. If you always know you're trading with the direction of the market, then I always know that I'm going to be trading with an EMA filter. I'm not going to be trading with a momentum filter because momentum is lagging. Let me explain that. If I'm going to trade momentum here or here, right? That's why I don't have the VM lean here, because it's lagging. Momentum is lagging. So I'm not waiting for momentum to happen before I take the EMA or before I take the imbalance, because momentum will transition. You'll be in negative momentum here before positive momentum kicks in, right? So this is why I really think that it's really about the EMA being on the right side of the trend. Another thing you can do is you can set this that you only take the market with the market structure. I don't like that. For me personally, this is me. I think that it's just it's a good filter for the bar close signals, but not for intra-bar signals. And we'll get into that in next week's V2. When we release V2, we're going to release version 2 in like a week from now. When we have these signals here, this candle here is a great example. I want to be on the right side of structure for those signals and the right side of trend. So I will make that a filter preference for me, but I'll set that up and I will do a training session on that so that nobody's wondering what to do on that. So you don't have to worry about this. But to answer your question without going off rails here, is that the only thing I'm concerned about, I don't have trap traders on. I don't have the delta divergences on. Not that they're not good. Trust me, you pick and choose your battles, guys. Like, how much order flow do you want to trade? I mean, there's a lot of different order flow combinations. I'm more interested in the imbalances, real-time imbalances, because it's really the power of the market. And I'm ultimately entering and interested in these confluent signals. That's my sweet spot. And I'm going to be trading those in the trading room with Jim, and we're going to be talking about that. Yeah. 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 I made 4 templates. Here's my request, guys. I've made 4 templates for you. And this is not like all the other algos. Please don't treat it like this, because it's better than that, but it's different than that. And what do I mean by that? Well, if I go in and show you what I built, I built 4 launch templates. It says launch on them. Okay. Why did I do that? To teach a concept on scalping versus day trading, and to teach a concept around money management versus no money management. Could you trade those? Yes, you could trade those. Do I suggest you trade them? It's not for me to decide, because that money management needs to be changed before you can trade it. This is the reason why you can't just take a plug and play algo template and expect it to be the end all be all. That's why I want you to come into the trading room versus me just here, take a template and run with it. Yes, you can take this template and run with it, but if you do, check the stops and targets. Check the dollar value risk per trade, please, because it's set to maybe not be aligned with you. Okay. Just really, really important. Thanks, Jack. But I just want you to know that, yes, there's 4 templates that come here, and those are the 4 templates that you see me here. These templates here are available to you. You'll be able to go in and take a look at them. Okay. The scalp template's very high volume thresholds. The day trading is less. And I will give more. We will give more as we build them, and I will provide them in the day trading room next week with the guest pass and everything. But we're not going to be running 4 different templates in the room. Like I'm going to be running a primary template to teach and to execute, and I'm going to be running a manual trading chart. What I envision the trading room to look like is going to be like this. Just like this. And we're going to run it like this. And I'm going to teach you how to read what's coming in. Literally this granular. Why? Because I'm going to draw the value highs and value lows of the auction. I'm going to plot the high volume, low volume nodes. And I'm going to teach you how to trade order flow the right way. The way that it should always be traded, that it cannot be traded with all the other software that's out there. It's just, it's not available. You can't do it. And so what you're seeing here, this is kind of what I envision. I've got an algo template running on the left, and I've got a discretionary entry chart on the right. And any updates that I put out, for templates or V2 and V3 with additions is all part of it. Like you buy it, you own it, guys. We're adding this confluence signal. Okay, we're adding this confluence signal as an automated entry. It's just not automated yet. And it was really a preference. I said to the guys, I said, I've been trading this manually just as much as I've been trading it automated, and I want to automate this entry. So they're working on it, and it'll be out quickly, and you'll get that. Yeah, you won't have to, there's no extra cost for V2 or V3. It's just, it's yours. It's, you buy the software, you'll get a nice fancy email. We've updated V2. Enjoy the next push. Right, guys? So order flow is more expensive. Why? It costs me 10 times more to code it. It costs me more time to develop it. It takes me how much more time to build it, right? It's kind of like you can build a house or you could build a sixplex. Which one's worth more? The sixplex, right? This is like a skyscraper when it comes to development and coding costs and everything. So it's a little bit more expensive than the other products. We've dropped it 50% for everybody to get a discount. And you guys, yeah, exactly. And Jeff, I want to give a shout out to Jeff and the Sergio and Jonathan and the team, because like the time that they went into this is insane, right? It's insane. Yeah, the sale ends on my birthday. Yeah, June 11th. And then we're going to kick off June 12th with a kicker, right? So thanks, guys. So can you guys give me a yes that I've addressed all your questions? Everything is clear. I want to make sure everybody understands something. If I missed something, please don't take that as an insult. I wasn't trying to avoid you in the chat. Ashley and the team and Jim and everybody's here answering them. Well, yeah, great question. This is not running on bid ask. This is running on uptick, downtick. That's the whole killer, right? Like you could run it on bid ask, but why would you want to? Uptick, downtick's like 95%, 98% correlated to bid ask, and it's like 1/10 the computer resources. Yeah, it doesn't make sense to do it on bid ask. Yeah, lag is not there. Yeah, you're not going to have lag. Yeah. Yeah. If you have lag, it's because your computer's not working right. Okay. So hopefully you can see the power of disrupting the order flow game. I'm going to sign off, guys, and go get some lunch and start prepping the templates for the trade room and the AMA. I'm going to be working with Jim and getting everything ready. Please do me a favor and send all your questions. If you have any questions on, getting the the software and stuff. That's what we're aiming for, Brent. That's what we're aiming for, Brent. Yeah. Hey, Brent, did you see my emails that I sent out? I know we had a conversation a while back, but I know you're on the ship, and I don't know if you got my emails. And you're on the ship? Yeah. Are we able to book a call? I have some stuff I wanted to share with you. Yeah. Excellent. Excellent. Perfect. So range bar charts explanation once again. Thanks. Wow. What time is it for you now? Yeah, so my time, the trade room runs my time 5:30 a.m., 8:30 a.m. Eastern. We're gonna start the room early, but I'm not going to be running the order flow until market open. So we're going to have a good hour of getting everybody acclimated, getting everybody up to speed, making sure there's questions. Why? Because I don't want to trade order flow before pre-market. I don't want to. There's no need to. I want that flow of volume coming in off the open. Yeah, unless there's a major news announcement coming in pre-market that can drive the market, but no point. Yeah, only works on Ninja. We'll run the room as normal, but all the trading will stop between market open and 7:30 to 8 Eastern, or sorry, my time, which is like 11. No trading past 11 Eastern. There's no need. Like this type of system, this type of approach, it's completely different. Yeah. So if you need help with purchasing, if there's an issue with trying to purchase through the PayPals or anything of the nature, just send an email. Ashley and the team will help. And yeah, I want to thank everybody for being here. This is an event that we've been prepping for a long time, and I'll be doing this event probably again, just to make sure that you guys understand how to get up and running in this. We'll do the AMA tomorrow. There's an AMA on this, so we'll prepare everybody and get everybody up and running. Yeah. Thanks, guys. Have a fantastic day, and enjoy the software. We'll get you up and running and get you going. Yeah. Take care, guys. We'll see you guys tomorrow in the AMA.